Good morning, everyone, and welcome. My name is Emily Martin. I'm NCEDA's Program Manager, and we're excited to have you with us. Before getting started, we'd like to review the logistics of this webinar platform. You'll see on the screen a few important logistics to read through as attendees. To reiterate, all attendees are muted and will stay muted during the presentation. The best viewing option for your screen is called Speaker View, which you'll see as a viewing option at the bottom of your screen. We'll have a live Q&A session at the end of the presentation. During that segment and any time during the presentation, you can type your question into the Q&A box. To access this option, click Q&A at the bottom of your screen and then type in your question. These questions will be addressed at the end of the presentation. If we are unable to answer all the questions live, NCEDA will send out a response sheet to all participants afterwards. We will not be checking the chat box, so make sure you put your questions in the Q&A box rather than the chat. This webinar is recorded, and a link to the recording will be sent to all registrants to use as a resource. At this time, I'd like to introduce NCEDA board member Randall Johnson, who will offer welcoming remarks and introduce our presenters.
Thank you, Emily, and thank you all for joining us today. Today's webinar explores a topic weighing heavily on the minds of everyone in the economic development field: how our economy is holding up under the weight of the COVID-19 pandemic. My name is Randall Johnson. I serve as NCEDA's Vice President, and I head up the North Carolina Biotechnology Center's Southeastern Office. On behalf of President Pat Mitchell and the NCEDA Board, it's my pleasure to welcome you today to this latest installment in NCEDA's busy webinar series. We have an excellent program set up for you today. Before I introduce our expert moderator and panelists, I'd like to take a moment to thank our partners who made it possible for NCEDA to offer this program. Today's discussion, entitled From Recession to Recovery, Assessing the Economic and Financial Impact of COVID-19, is sponsored by Electricities. NCEDA is grateful for Electricities' generosity, enabling us to produce valuable professional development offerings for our members, whether in person or virtual, such as today's program. We also thank NCEDA's annual sponsors. You'll see their names and logos float by on the screen now. These important companies and organizations stand with us and with our members year-round, offering financial support for NCEDA's important mission and engagement in our activities, and we're grateful for them and their partnership. Exactly 80 days ago, on March 2nd, 2020, North Carolina public health officials reported the state's first lab-confirmed positive case of COVID-19. In the weeks since, the state has seen a meteoric rise in layoff notices, business closures, and unemployment insurance claims. It's a disease that takes both lives and jobs from North Carolinians. As we now look to enter phase 2 of the reopening, what do we know about the current health of our economy? When will the new normal arrive, and will we know when we see it? Will there be permanent damage to industries such as tourism, entertainment, and retail? And what does all this mean to the professional economic developers charged with job creation, business retention, corporate recruitment, and marketing our communities across North Carolina? We're fortunate to have 3 experts with us today to help us understand our current situation and prepare us to navigate these uncharted waters. Moderating today's panel is a leader who needs little introduction at an NCEDA event. Chris Chung, President and CEO of the Economic Development Partnership of North Carolina, has been a close friend and partner to NCEDA since arriving in North Carolina in early 2015. Peter Gwaltney is President and CEO of the North Carolina Bankers Association, a position he's held since January of 2015. He previously served as CEO of the Louisiana Bankers Association for 16 years. And since 2019, Peter has been a member of the board of directors of the American Bankers Association. He proudly holds a BA degree from Louisiana State University in Baton Rouge. Mark Vintner is on the short list of go-to experts on the nation's economy. He's a frequent guest on CNBC, Bloomberg TV, and other financial media. Mark is Managing Director and Senior Economist at Wells Fargo Securities, where he tracks U.S. and regional economic trends. Even though his portfolio is national, Mark is based in Charlotte, so North Carolina can claim him as one of our own. He holds a BBA from the University of Georgia and an MBA from the University of North Florida. We're grateful to these distinguished guests for sharing their insights with us today. Thank you, gentlemen. Now I'll hand the reins over to Chris Chung to lead the discussion. Thank you.
Thanks very much, Randall. Good morning, everybody. I miss seeing a lot of all of you NCDA members in person, but I do appreciate the chance to help moderate this morning's webinar. I think what I'm looking forward personally to some great insights from both of our panelists, both Peter and Mark. You heard Randall introduce just now. So my job, of course, today is to be a little bit of timekeeper, a little bit of traffic cop to keep the discussion going on, keep making sure that we wrap up on time out of respect for everyone's schedule. So we'll basically hear from each of our presenters, and then we'll have some Q&A, as well as questions from the audience in the second half of this hour. Before we get into the remarks from both Peter and from Mark, Liz and Lawrence had asked me just to give a quick update on some of the things that we're seeing at EDPNC as we have encountered COVID-19 on the economic development front over the past 2.5 months. I first want to point out, even though we know that oftentimes the focus in economic development falls on issues like business recruitment and what the state is doing to attract new employers, I think if anything, these past 2.5 months have shown all of us the importance of taking care of existing industry, really to help as many of these companies in our state and in our communities to not only survive, but hopefully adapt and even thrive as we enter this new reality that so much of the world is facing right now. For our existing industry team, that has meant everything from being just a go-to, accessible, knowledgeable resource on a variety of services and support efforts that can help existing industry, to even helping some of our existing companies in North Carolina make the pivot to things like personal protective equipment production. That is also something that we've seen our existing industry team do all across the state. And of course, helping some of our existing manufacturers even think ahead to the post-pandemic world and how they might increase their sales and their export footprint overseas in this new economy. I just, again, really want to call out the work of the existing industry team, not only at the EDPNC, but all of you who are doing this at the local level. Again, one thing that's been abundantly clear in the past 2.5 years, or 2.5 months, it felt like 2.5 years, but the past 2.5 months is just how important it is to help our existing business community to get through these unprecedented times. There will be opportunities to recruit new businesses to North Carolina, but more so now than ever, we cannot forget to take care of the jobs and the industries that are already right here in our backyard. So really just a shout out to all the existing industry efforts across the state going on right now. We've also seen, of course, the impact on tourism. Many of you know that tourism marketing is one of the key responsibilities for the EDPNC. Everything we can do every year to market our beautiful tourism assets across the state and help contribute to what's a $26, $27 billion a year industry in North Carolina, a lot of that has come to a screeching halt in the past 2 months. And many of you who are home to tourism destinations, tourism attractions, and of course the small businesses who make up the tourism economy, you know just how hard these past 2.5 months have been for those companies that make up our large tourism economy. That will too come back in time, but what it looks like, how quickly it will come back, these are some of the insights that we hope to hear from our panelists this morning. Of course, at the state level, we're doing everything we can to be ready to market North Carolina as a tourism destination once people are permitted, able, and ready to travel, which is really probably the biggest thing. A lot of our research on the tourism mindset or the traveler mindset just shows how much safety is going to predominate as an issue that's top of mind for individuals as they're looking at where they're going to take that first trip once they've come out of their homes and into this new world that we live in. And of course, we want to make sure that not only for North Carolina residents who are looking to travel, but also some of the residents from surrounding states here in the East Coast, we want to make sure that they know what there is to do in North Carolina, and most that when they come here, they can be assured that it's going to be a safe experience for themselves, their families, their friends, and others that they're traveling with. And that's a little bit of something that we're seeing on the tourism front, again, in this new reality. Last, I'll just say a little bit about what we're seeing on the business recruitment front. Again, I know that's oftentimes a focus on terms of the work of EDPNC and for economic developers in general. You can imagine that in this kind of environment, there are fewer companies that are looking at putting up a new expansion or a new location. But I'm pleased to say that the activity hasn't come to an absolute stop. The first couple of weeks in March, when this first became very, very serious here in the United States, yes, we did see activity dry up pretty much to zero. Fortunately, starting in very late March and really continuing since that time, we've continued to see a steady, if not very large, flow of activity of expansion and recruitment projects. I'll just put one graphic up on screen so you all can see a little bit about what we're seeing at EDPNC in terms of expansion projects and business recruitment deals. Give me 1 second to pull that up here. You all should hopefully see this in front of you, but this is being pulled from within our Salesforce dashboard. Right now, we're sitting at approximately 150 active projects. But if you take a look at this, this is basically showing new projects signed. So this is our way of measuring new deal flow activity, basically on a month-by-month basis. So you can see where we historically would be throughout these late spring and early summer months. We're, of course, below pace of where we would be at any given point during the year, but we're not tremendously off pace. We've got a little bit of ground to make up here in May. May is so far slow in terms of new projects, but like I said, it has not come to an absolute standstill. There are still companies that are looking at siting new locations. There are companies looking at expanding their North Carolina footprint. Of course, the process by which these companies go through that decision making, that of course has changed in this interim while people are not permitted to travel. They can't go visit sites. They can't go visit communities. They can't negotiate face-to-face on local and state incentives. You can imagine the decision-making process is slowing considerably for the companies that we typically assist. But all is not lost. There is still deal flow, and that gives us some glimmers of hope of the pending economic recovery, which, again, is going to be a key part of what we hear about from our panelists this morning. So with that little bit of preface, I'm going to stop sharing the screen and get ready here to introduce our first speaker, who will be Mark Vittner. Mark, you heard by way of introduction, Mark and I were actually last together in person shortly before COVID-19 really became the serious situation it is today here in the U.S. back in early March. He was giving me a tour of the trading floor for the big division down in Charlotte. And again, it's just one of those workplaces that I can only imagine is going to be dramatically different as we enter this era of social distancing and keeping our 6 feet apart from one another, wearing masks and all that. But it's good to have you, Mark. Really looking forward to the insights that you have. We know you're a sought-after speaker in all corners of the U.S. and in the Southeast. Appreciate you taking some time to be with us this morning. I'll turn it over to you right now to offer your remarks, and then we'll go to Peter after that.
Great. And I'm going to try to keep it fairly short. Hopefully, I've got control over here now, and I'm going to put up a presentation, but I'm only going to go through. Refer to a few parts of it. You know, I've got a little bit of an outline here, and I'm going to kind of add, kind of just speak from that, but reference a few other things here. In terms of where the economy is right now, most of the economic data that we're seeing today reflects probably the absolute worst of the economic impact from the shutdowns. And that was mostly the month of April. The shutdown really took hold. It began in early March, but it really took hold from the middle of March through the end of April. That's when the bulk of the impact was. The employment data, which get a lot of attention, and we had the 20.5 million person drop in non-farm employment in the month of April, largely reflect the period from the middle of March to the middle of April. So any job losses we had in the third and fourth week of April would actually show up in the May data. The shutdowns began to ease toward the end of April, and Georgia was one of the states that kind of opened early, along with Colorado. And there's a lot that can be learned by looking at some of the data there. They have seen quite an improvement in some of their economic numbers more recently, but the recovery is a little slow. We think that the May data will also be weak. That's what we're going to get, and that's what we're going to be getting in the month of June. But when we get the June economic data, we're likely to see a return to growth. The economy began to grow in the middle of May. All 50 states have reopened at least parts of their economy by now. And so when we get the June data, I think that we will see that we added jobs, that output improved, that restaurant dining improved, and travel improved. But before we get that, we're still going to see some pretty negative numbers. GDP declined at about a 5% annual rate in the first quarter. We think it's going to decline at a 25% annual rate. That's what's in our forecast. I actually think it's probably going to be worse than that, looking at the hours worked data. We compute our forecast by adding up our best estimate of consumer spending, business investment, government spending. But if you just look at total hours worked in the economy, it looks like the decline is going to be somewhere between 30 and 40%. Now, biggest drop that we've ever seen on a quarterly basis in real GDP. That's magnified, though, that a 40% drop would really be a 10% drop on a sequential basis, but it's still pretty massive. The decline in economic activity is likely to be confined to that period from the middle of March through the middle of May. So all of the decline has been compressed into 3 months. The economy is going to be growing from June onward, and that recovery by some measures will be relatively strong, but when you take into account how far we fell, we will only be recovering a small portion of what was lost. A disproportionate share of the cutbacks have been in the leisure and hospitality industry. They make up about 38% of the job losses. When you look at jobless claims, it's about 45% of the job losses. When you look at the non-farm employment numbers, it's mainly hotels and restaurants. And if you look at data from Open Table that look at the number of seated diners, it's down about 85%. It's begun to improve. And in the states that have reopened restaurants, we've seen it come back a little bit. The Open Table data was down 100%. Now it's down like 96%. The FAA data on the number of people, TSA data, number of people going through TSA checkpoints has inched up slightly. So we are recovering. That will equate to significant job growth and significant GDP growth. In terms of recovery, I don't think it will be a V-shaped recovery. We think it'll look more like a Nike swoosh, which is kind of a Nike swoosh emblem. But I don't think it'll be smooth like that Nike swoosh. I think that it's going to be a little bouncy. The progression of the recovery will depend a lot upon how the virus plays out and how quickly individuals and businesses are willing to re-engage in the economy. And a lot of that depends on how the virus plays out. We know a lot more about the virus. We're learning a lot more about the virus. Yesterday, the CDC put out some guidance and saying, you know what, the virus doesn't live very long on surfaces, and there are no known transmissions from somebody picking and getting the virus from their grocery bags or handling items they purchased from the grocery store or bringing in a Amazon package. There's been no known transmission that has occurred through that, and that while it's theoretically possible, it's highly unlikely. We know that most transmissions occur from people being indoors, not from being outside. And so that's very encouraging, and I think going into the summer. Viruses also tend to spread less in warmer weather and in humid weather. And as we move into the summer, we should see the transmission come down somewhat. When you look at the data are encouraging. The number of new cases has been growing less rapidly. The number of deaths has been decelerating. The new deaths has been decelerating. There are some issues. I mean, we had a big issue with a poultry processing facility yesterday with a large number of asymptomatic cases that were discovered. When you look at some of the measures of the number of cases, the data look really lumpy because if they discover something, those cases may have actually occurred several weeks ago, but people are just tracking the number of confirmed cases and the change in number of confirmed cases. The Georgia Department of Health Services does a very good job of tracking their data, and you can go to their website, look at their tracker. So does Florida. North Carolina does a good job too, but look around at some of the states and get a little bit more comfortable with it. I've been looking at Georgia because they're a little bit ahead of other states in reopening and trying to get an idea of how quickly folks are going to re-engage. But the data do look encouraging. The number of new cases is declining fairly significantly. The other progress that we're seeing on the virus is we have had one therapeutic drug that has been approved. We've seen great strides in testing. For all the talk about tests, there are now more tests than there are people willing to get tested. And so there is a vast amount of unused testing capacity around the country. And so that's largely behind us. So we made progress there. We have several more therapeutics that are in the pipeline. We've got a good biotech research team that tracks this, and we get a weekly report on it. Very encouraging there. And we've had some encouraging data on a vaccine. And to get totally back to where we were before and have people behaving in the same ways or in the same level of activity that we had previously, we probably need a vaccine. At the earliest, it's a year away. If Moderna hits a home run and they're able to ramp it up very quickly, that within a year we might be able to see that vaccine available to medical personnel and first responders, and 18 months to 2 years, it might be available to the public at large. But that's a home run. That's everything goes right, and the data is encouraging there. But there's over 100 companies that are working on a vaccine. I think 18 months to 2 years is probably a more useful timetable on when we're likely to see a vaccine, and a little bit longer before it's out in the public. But the economy will improve over that time period. And I think in the very near term that June, July, August, September, and probably October are going to see somewhat lessened concern about the spread of COVID and increased focus on growing the economy. That is going to be the time to go after new business and to recover business. I think that tourist areas where people drive as opposed to fly are going to do reasonably well. We've got a lot of folks from New York that have come down to homes that they either own or they rent as long-term rentals in North Carolina already. So we're, I think that I wouldn't say that it'll be a good year by any stretch of the imagination, but I think that our tourism economy is poised to do a little bit better as conditions improve. Now, I'm not going to go through all the charts, but I did want to show you, I have a number of charts in here that will be made available to you on employment conditions that show you how large the job losses were and how concentrated they were in the leisure and hospitality sector. One other point that I wanted to make is that 78% of job losses have been temporary. The best way to explain that is to give an example. If you worked at a Starbucks and that Starbucks was closed, you would be unemployed because you couldn't go to work and earn any money, but you still worked at Starbucks. And when that Starbucks reopens, and most Starbucks are reopened today, they haven't called back all their workers, but they called back a lot of their workers, and you go back to work. That's a temporary job loss. What we are seeing now is that a number of the temporary job losses are turning into permanent job losses because some restaurants, particularly independents and full service restaurants, are not reopening. They're deciding they're going to close permanently. And we're seeing a number of businesses that are closing permanently. And so of those 78% of the job losses that were temporary, we're not going to find out that, 60% turned out to be permanent. It's going to be a small proportion of those temporary job losses that turn out to be permanent, but they will get a disproportionate share of attention. With so many of the job losses in the hospitality industry, rental apartments have been hit hard, but not the newer rental apartments you see being built in Raleigh and Charlotte and Wilmington and Asheville. It tends to be the older properties, the B and C units is the way that the industry categorizes them, that tend to be not owned by institutions, but individuals or small corporations, and tend to rent to a lot of workers in the hospitality industry. Looking at the progression of COVID in North Carolina, the data are a little dated. They're not a couple days old. We haven't seen as much improvement in the number of new cases as some of our neighboring states have. I think that some of that has been some issues at in meat processing plants and some catch up in nursing home facilities. The mobility data has turned up. This data comes from Apple. And the more recent data, I looked at it this morning, show the numbers back above 100%. The greatest improvement has actually been in Charlotte, which has actually seen the least progress at reducing case counts. But Raleigh's also back above 100%, and Greensboro's back above 100%. It's not available for every city. We're estimating that from peak to trough, North Carolina is going to lose somewhere around 950,000 jobs, but that by the end of the year, that job loss will be trimmed to about 450,000 jobs. And it will take us all the way until probably the end of 2021 or early 2022 to actually replace the number of jobs that were lost. That's all I've got. I'm going to keep us on time. There's a lot of slides in here to look at, but that's all I've got. And it was also have my forecast. So I'm going to cut off now and then turn it over to Peter. So let me see.
Very good. Thank you, Mark. Well, thank you, everybody. And Mark, I'm always excited about opportunities to spend time with you and learn from you. And I appreciate your comments. That's very helpful to us in the banking industry. Well, thank you, all of you, for the opportunity to spend time with you this morning. I'd like to start with just a little background information on North Carolina's banking industry, just to give us a little context. We have 84 banks doing business in North Carolina with 2,200 branches in all 100 of our counties. 47 of these 84 banks are headquartered in North Carolina, and Charlotte is the #2 banking center in our nation, just right behind New York City. In addition to the very largest banks in our nation being right here in North Carolina, we're also home to a thriving community banking sector, which gives businesses of all sizes and stages wide availability to capital of all kinds. And I know that that's important to all of you. Well, with all of that as a backdrop, we knew going into this coronavirus pandemic and the lockdown that followed, that there would be significant financial implications on business, employees, and families. As we like to describe it, we're in a health crisis with a financial tail. It's not a financial crisis like we experienced with the Great Recession. So fortunately, America's banks were well prepared for this crisis. The banking industry nationwide had more capital and stronger earnings than we did leading up to the Great Recession in the 2008 period. It would be hard for our nation's banking industry to be better prepared for this event than we are right now. I was on a call with FDIC Chairman Yelena McWilliams earlier this week, and she echoed that sentiment of how strong the industry is as a result of what we learned from the recession and the profitability and earnings that we've had since then. When the president announced the national emergency and Governor Cooper followed shortly thereafter with his executive order closing all but essential businesses, North Carolina banks immediately got to work helping their customers assess the challenge that was ahead of them and to help them identify financial solutions that would see them through the hard times that were coming. Every customer is different, every bank is different, and so banks have tailored their solutions to the challenges, the unique challenges that each business and each customer is facing right now. And this is not a one and done exercise that happened on the front end of the lockdown or the pandemic. It's an ongoing process, and it will continue for quite some time. In late March, Congress passed the CARES Act. You're all familiar with that. It created a wide range of economic relief initiatives, including the Paycheck Protection Program. From the launch of the Paycheck Program on April the 3rd, that was a Friday, until recently, banks have been completely consumed with PPP loan processing and funding, and they've had to deal with the slow trickle of program rules and guidance. It's been described by many, including the SBA, as trying to build an airplane while in flight. And that's a good and appropriate analogy. Bankers have worked literally around the clock, nights and weekends and all day Easter Sunday, to process as many PPP loans for small businesses in their communities as fast as they possibly could. And you may remember the news from the early days of the program that banks were just completely overwhelmed. The number of applications and the strong demand for these loans was just overwhelming. But bankers were happy to play an important role in the relief effort, and they did it with a great sense of pride and civic duty, and we're excited to help their customers in their communities. I remember a conversation I had with one bank CEO. He confided in me early in this process, dealing with payment deferrals and fee waivers and all kinds of activities, trying to help their customers through the crisis. And then they started allocating financial resources and people to the production of Paycheck Protection Program loans. And he told me, he said, I don't know what any of this means for my bank, but I'm going to have to worry about that later. And he said, right now, our first concern is our customers, our community, and I just hope the regulators will be understanding. And that's the sentiment I've heard from all of our bankers across the state. That's where their minds and their hearts are. So just looking at the relief that has flowed through the nation's banks, the Paycheck Protection Program, it's hard to adequately describe the magnitude of what's been accomplished. I know small businesses had frustrations, bankers had frustrations, but what's been accomplished is historic. Working through the SBA, America's banks have processed and funded more loans in the first 14 days of the Paycheck Protection Program than the SBA approved in the past 14 years. More in 14 days than in 14 years. That's truly monumental and a historic effort. And certainly the times called for that. We had to do that. So I want to share some of the latest Paycheck Protection statistics with you. To date, 4.3 million small businesses nationwide have received $513 billion in Paycheck Protection loans with an average loan amount of $118,000. In North Carolina, 109,000 small businesses have received more than $12 billion in PPP loans. Now, there's still $100 billion remaining in PPP funding, so that any small business that qualifies for under the rules of the program can get a loan from a bank. And now that the demand for PPP loans has fallen dramatically, the turnaround from application to funding is just a matter of days. So the program is set to expire at the end of June. There is plenty of time for any small business that wants to apply for a PPP loan to do so. Now, Congress is working on two initiatives right now. They're working on a number of things, but two things of focus that I want to talk about right now. The one that we're watching closely, the banking industry is watching closely, has to do with Paycheck Protection Loan forgiveness. Congressman Phillips of Minnesota and Congressman Roy of Texas have introduced a standalone bill that corrects some of the challenges that were unanticipated in the forgiveness portion of the program. It has strong bipartisan support, and it should pass next week by unanimous consent. It will be a huge relief for small businesses who've taken out Paycheck Protection loans and are relying on the forgiveness of those loans. The next effort that you're all paying more attention to is the Phase 4 legislative package, also known as the HEROES Act. The legislation, this particular legislation, is going to take a little more time to pass than the first three bills that Congress passed. And they did those with unanimous consent and very quickly. This one won't be the same. It's gotten a little more political, as you've heard about in the news and read. And it probably won't be the same bill that passed through the House on a party line vote. This legislation provides important financial relief for states and local governments, which I know is important to you. And as a result of the falling tax revenues that are resulting from the lockdown. Now, it's too soon to forecast what will be in the final version of the HEROES Act, But whatever it is will be negotiated by the House and Senate leadership with the administration, much like the previous bills proceeded. And so if you have not already done so, I would encourage you to contact your congressman, contact Senators Tillis and Burr, and let them know your wishes. They want to hear from you. Now, bringing this back home to the issues in front of us today, bankers have been given a significant amount of regulatory freedom to help their customers, their small businesses, and their communities through the challenges that are ahead of us. And speaking for them, I can tell you with great confidence that they're absolutely committed to helping North Carolina come out of this much stronger than we were before the coronavirus. Now, the big question on everyone's mind is, how long is it going to take for us to get back to normal? Or will we ever get back to normal? And I've been through something like this before. So in closing, I want to share just a brief personal story. As Randall mentioned earlier, prior to moving to North Carolina, I served as CEO of the Louisiana Bankers Association. South Louisiana was my home for 30 years. And I was there in August of 2005 when Hurricane Katrina completely destroyed New Orleans and depopulated the city and the surrounding communities for an extended period of time. There were very few homes that weren't destroyed or completely flooded. The phone and power infrastructure was completely destroyed due to saltwater intrusion. We only had a patchwork of roads and highways to get around. It was total devastation. We had 27 banks operating in New Orleans that were flooded and completely out of business, with no idea where their employees or their customers were, and no way to communicate with them. All of the banking regulators who visited the city, and I gave them tours around the city, they told me their greatest fear was widespread bank failures that were certain to come just looking at the situation, and I couldn't disagree with them from where I sat at the moment. But people are resilient, and banks were among the first businesses to reopen in the city. It wasn't easy. We had to transport employees into the city each day under armed guard, operating in shared branches with generators and National Guardsmen standing guard out in the parking lots for security. The opening of the banks were then followed by the grocery stores, hardware stores, restaurants, and then hotels and others. And then homeowners slowly began to return and rebuild their homes in their neighborhoods. A year later, not a single bank had failed. And not long after that, all of the banks operating in New Orleans were stronger and more profitable than they were even before the storm. And so my profound takeaway from all of that was just how amazingly resilient banks, businesses, and communities are. They're all built by people, and people are incredibly resilient. So I don't mean to minimize what we're going through, because what we're going through is very difficult right now, and people are in a lot of pain. But what I know from my personal experience is that while it's painful, we'll get through it. And we'll get through it by supporting one another with the resources and talents that are available to us. And for the banks that I serve with the North Carolina Bankers Association, that support and those resources and those talents will come in a variety of forms. So I encourage you to please put my banks to work and see what they're made of, and I promise you, you won't be disappointed. So that concludes my remarks. I thank you all again for the invitation to be with you today. I'm honored, and I look forward to your questions. So Chris, I will hand over to you.
Thank you very much, Peter. Appreciate your comments as well as Mark's. Mark, if we could ask you to turn your webcam on, and we'll get into the Q&A session here. Just a reminder again, for the webinar attendees, you do have the option of submitting questions. I'll keep an eye on the tab here, as will the folks at NCEDA, to make sure that we're trying to get to audience questions as quickly as possible. But just to get us started, a couple ones to get going. Peter, again, you talked a little bit during your remarks about the federal Paycheck Protection Program, the fact that there's still $100 billion available. for those economic development groups who are trying to help their small businesses navigate and secure some of those relief dollars? Any advice that you might offer, knowing what you do now after 5-6 weeks of this program being out on the street?
I would, one thing I've learned through all of this is how important it is for business owners, homeowners, and city officials to have a relationship with their local bankers, to have at least one person in the bank that you can call. So that's where I would start. I would call your local banker, call someone you have a relationship with, and express your interest in getting a Paycheck Protection loan, or just seeing if you qualify. And they can help walk you through it, and they have good contacts. And if they're not able to help, they'll know someone who will. And so that's what I would recommend. And if you hit a wall, then contact me, peter@ncbankers.org, and I'll try my best to help direct you.
That's great. Thank you, Peter. Mark, question for you here. You talked about forecasts for the economic recovery. I'm curious, how much does consumer confidence factor into your all's projections of the recovery? Of course, we have a situation here, unlike anything in the past, where people are concerned about their health and well-being as they venture back out. I'm just curious, how do you assess and factor those kinds of emotional issues into your projections on how quickly the economy rebounds?
Well, it's somewhat difficult to assess consumer confidence right now because it is one indicator that has not plummeted as much as you would think, given how weak so many of the other economic indicators are. And we get consumer confidence from a number of sources, and they all are fairly consistent. That yes, it's taken a big hit. It's the type of hit that you would see in a recession, but not the type of hit that you would think, given that we lost 20.5 million jobs. One of the things that I'm trying to grapple with is I'm trying not to be too optimistic and to make too much out of certain things, but with over half of the job losses coming at restaurants and in retailing, many of the jobs that were lost were part-time jobs and are relatively low-paying jobs. It disproportionately impacted renters. When you look at the housing market, applications to get a mortgage to purchase a home are actually higher today than they were prior to the crisis. So that's a somewhat surprising result. And I think that it's hit some areas of the economy incredibly hard. And there are other areas of the economy that are proving to be somewhat more resilient. So I get back to what I said at the start. I would position my business to be having things picking up considerably in June, July, August, September, and October. And I go through that period for the reason that the flu season tends to pick up around Thanksgiving. And I don't know what the prospects are for a second wave. My hunch is that whenever we see people re-engaging the economy, there's still going to be social distancing. They're still going to be washing their hands more. And I think that the fears about the second wave may actually prove to be greater than the second wave itself.
Interesting. That's a great perspective. Now, question here from an audience member. Thoughts on whether or not Congress will or even should simply modify their stimulus funding. So rather than actually sending the money into the hands of businesses, would we be better off as an economy if those dollars were going directly into the hands of the citizens and the workforce itself? So you've seen some other countries that have experimented with that approach. It seems to be having some economic success. So almost like they call it a universal basic income or something like that for the short term. Curious, either Peter or Mark, if you have thoughts on whether Congress will or even should go in that direction.
You know, I don't know. I mean, I think you'd have to go lightly, and I think a universal basic income might be helpful if it replaced some of the programs that are currently in place. Because one of the major benefits of a universal basic income is that it would remove some of the disincentive that exists for people that are receiving benefits from re-engaging in the labor market. And that was one of the big problems that North Carolina faced following the last recession, when benefit payments, particularly in rural parts of the state, were greater than the job opportunities that were available to many of the folks that lived in the rural parts of the state. And as a result, North Carolina's unemployment rate came down much less rapidly than other states, not only around the country, but within the Southeast. And so we came down much slower than it did in Virginia and in South Carolina. So, you know, I don't want to see the nation make that same mistake. So if we go to a universal basic income and remove and it replaces some of the existing support programs that are in place, I think it could be very good, and it could be a positive in that it would remove that disincentive for people to re-engage in the labor market.
Well, and to some extent, we've already done all of the above. We have the Paycheck Protection Program going to small businesses to get to their employees. There are a number of lending and liquidity facilities the Federal Reserve has implemented, a number of them. And we also had the economic impact payments that went out on top of the unemployment benefits that were boosted as a result of the CARES Act. So they have attacked this on many fronts. And so the question we've been asking is what other tools does the Fed, the Treasury, the administration, and Congress have? And I believe, well, the HEROES Act is $3 trillion. It's a lot of aid in a number of different forms. And some of the hesitancy of the Senate to pass it is wanting to see, well, what about the other $3 trillion that Congress has approved? And what about the other $4 to $6 trillion the Federal Reserve has put into the economy? I don't think we've had time to see it have an impact yet. Have we, Mark?
Yeah, and I agree completely with that, because there, as you said, with the payroll protection program, there's still funds available there. And, you know, part of the benefit of big relief packages like this is in the announcement effect. And we're getting no benefit of an announcement effect in this case. And we're committing to spend $3 trillion. And we're basically taking the budget deficit to where we feared it would be 50 years from now and doing it overnight. And I don't think that's a wise move when we don't know how this virus is going to progress. We probably need to hold on to the policy tools that we have for a little bit longer. And a lot has been made about what Jay Powell said. Jay Powell did not say you need to spend $3 trillion now. He said that over time, the federal government is going to have to provide more assistance. So he didn't say they had to provide it immediately, but over the course of combating this virus, they're going to have to do more. So I do think I think it's right to be cautious and to make sure that we're doing the right things, because we can't just keep passing $3 trillion relief packages forever and ever. I mean, at some point, we're either going to be unable to place the debt, or we're going to see, we're going to monetize it in a way that's going to create an inflation problem.
Right. Thank you for your thoughts on that. Another question here. It's a specific concern for a lot of our members who are chambers of commerce, economic development groups. They're set up as 501c6 organizations, currently not eligible for assistance through Paycheck Protection Program and other loan programs. Curious if your thoughts on whether or not this segment of the nonprofit economy will see any kind of relief in upcoming congressional legislation. Again, either one of you can tackle that one if you have opinions.
Well, there's been a lot of discussion about this, and we don't know why 501c6s were specifically carved out of the legislation, because 501c6s take many forms. But one form they do take is advocacy groups, special interest groups like the North Carolina Bankers Association. And I think there was some hesitancy in Congress to give lobbyists access to PPP funds. And I understand that. But as a part of that broad brush, they eliminate economic development organizations and others that are doing good work and much needed work. And so there's been discussion on it. I don't know if that gets corrected in this, either in phase 4 or in this standalone bill that I mentioned earlier, the Phillips Cooper bill.
Great, thanks, Peter. Mark, any thoughts on this issue?
I really don't have anything to add on that, but I think that it would be more likely to be addressed in a smaller bill than this larger bill. I mean, unfortunately, economic development and chambers of commerce, they tend to, the support for that tends to be politically divided somewhat, and so it's something that's going to have to be traded off or something.
Right. Well, here's the flip side of that question. A lot of our economic development efforts are also supported by local government revenues. Maybe if either of you want to speak to what that forecast looks like for state and local government revenues, not just here in North Carolina, but really across the U.S. What are we looking at here over the next, let's call it 6 to 12 months?
Yeah,
Mark, maybe we'll start with you.
Yeah, it's revenues are tied to GDP growth. We've got this massive drop in GDP. It's going to take us probably till spring of 2022 to get back to the same level of GDP. So government revenues are going to take a hit over that time frame, but not uniformly. Property taxes should hold up okay if the housing market does as we think it's going to do. Transfer fees and title fees, all that stuff should hold up okay. We have seen a switch from consumption of things that are taxed, restaurant meals and things that show up in hospitality taxes, toward more consumption at home, which is not raised tax revenue. So that's a big hit, and I am a little concerned about. There's been a lot of the hospitality taxes have been pledged to build a lot of facilities. I'm not quite sure that we're going to be able to meet the commitments there. Some of the sales tax revenues that support public transportation are going to lag, and then income taxes. That we're going to see that that there's been a loss of wealth, and the recognition of that loss of wealth will show up as a drop in income. Interest and dividend income is going to be off considerably. So I do think we're going to see that income tax revenues are going to lag pretty significantly for this year and next year.
Mm-hmm.
Peter, any thoughts on the tax outlook?
I don't have a lot to add. What I hear from Mark is that the sources of tax revenues and the associated losses in those cash flows are widespread. They're coming from a variety of areas. And one particular sector, the housing market, I'm encouraged by how few homeowners are in forbearance right now, only 8% nationwide. And so that has held up strong. And so we're not in a housing crisis. At least we don't see one yet. Mark, what are your thoughts on?
Yeah, I don't see a housing crisis. I do think that we could see some issues in some parts of the rental housing market, but nothing major even there. I don't think that we're going to have big problems there. But home values, home price appreciation should slow. I'm very encouraged that forbearance relatively quickly went the way that I thought it should from the start, where the overwhelming majority of folks that are in forbearance are just having the missed payments are tacked on to the end of the loan. And the importance of this is that if you try to force people to make up those payments in a short period of time, that would depress consumer spending elsewhere, and it would really slow the pace of economic recovery. But by putting it at the end of the loan, the homeowner would have a little less equity when it comes time for them to sell their home and buy another home. But it really shouldn't have much of it should be a negligible impact on the housing market and the economy. So I'm encouraged that we've seen that, and it looks like the funding is in place throughout the system. There were a lot of dire scenarios that people were playing out in the first few days of this, and really people were letting their imagination run wild.
Well, that's good. That's certainly any positive news or inkling of positive news, certainly welcome. Let's talk about state policy really quickly. One of the values NCEDA provides for its membership is a very robust legislative advocacy effort. each of you, let's say, have a magic wand and you can command the legislature and governor to do your bidding. What are some ways North Carolina can shorten that eventual path back to economic recovery? Maybe Peter, let's start with you. Any thoughts yourself? I'm sure you guys do a lot of state legislative work, but thoughts on how we approach it from a policy standpoint here in North Carolina?
And we do quite a bit of work on the state level and the federal level, but much of it is focused on banking and not across the broader economy. I think the biggest thing we could do right now is small businesses don't need more debt, and we don't have the money for grants in a state budget, particularly with what we're facing right now. What they need is customers. And so entering into phase 2 now and giving small businesses customers that can buy things from them, and also allowing our manufacturing facilities and other businesses go back to work, that is just so critically important. So so that was the main thing. That's already been nearly accomplished with the beginning of phase 2. But I'm not a health expert, so I can't weigh in on that, but the sooner we can get back to work, the better. In terms of broader policy suggestions, I don't have any.
Sure. Mark, how about your thoughts on state policy?
You know, I think that in general, I agree with Peter. I do think that it might be helpful if the state were to identify some best practices and rather than come out with them on their own. I mean, you know, maybe it's the CDC guidelines on social distancing and you know, I think that one of the ways that we can encourage folks to reengage in the economy is for businesses to make it clear that we're complying with the CDC guidelines, you know, so that people feel comfortable about going out and about, and I think that's going to be very important as more and more people reengage and wondering if we're doing it correctly. I think longer term, the state needs to look very closely at public-private partnerships in providing services, because I think that government is going to have to become much more efficient over the long run, because the funding there's going to be this big funding gulf that we're going to see, and maybe looking at some of the best practices. You know, Georgia with Jackal Island and Stone Mountain Park and how they partnered with the private sector. You know, and they get around the ownership issues with long-term leases, but they're able to provide a much better experience for people visiting those facilities than the state could ever hope to do on their own. And the state still has, they're still state property. So we may want to look at things like that in order to leverage our dollars. We did a program on the aerospace market, and we had the CEO of NASA and the CEO of SpaceX, and I was talking to him. I said, "You guys get along?" They're like, "Of course we do." It says we're able to. The NASA CEO said we're able to get so much more for our money when we outsource functions to SpaceX and private companies. I'd like to see that. I'd like to see more of that at state government.
Great thought, absolutely. Before we turn it over to Randall for some closing comments, I'll just end with something lighthearted from each of you. You, like the rest of us, have been more or less stuck at home the past 2.5 months. Any silver linings or things you've been reading or watching now that you've had a little bit more time off the road and even out of the office? How have you been kind of keeping yourself occupied? Peter, I know you were probably still celebrating LSU's victory in the national title game, but apart from that, how are you been getting by the past 2 months?
Well, so yes, I have rewatched every single game on cable from the season, and I'm still a little giddy about that. I play guitar. I've been stuck in this home office for 10 weeks now, running it like a war room bunker. And I stop every now and then in the mini Zoom calls that I have. I'll turn the camera off and just play guitar for a while and listen. And that's kept me sane. But my favorite thing about this whole experience is the spirit of gratitude that I've heard from everyone, my neighbors, bankers we serve, other people. They're just grateful. There's this wonderful sense of gratitude that's in the air, and I'm very thankful for that.
Yeah,
very well said. Mark, how about yourself?
Yeah, I've adjusted to the work at home fairly well. I mean, I try to get out and walk a little bit. and have worn out a pair of shoes, and just walking, going 3 miles in one direction and 3 miles in the other direction, and finding things there in my neighborhood. I was on the road, 3 days a week prior to this, and so it's interesting being at home. This is probably the longest I've been at home since I've been an economist, and so it's it's great getting to spend more time with the kids and doing things. So I'm glad to make use of the time. Each year I make up a list of about 100 things to get accomplished, and so I did that too. I made up a list of things to accomplish while I'm here at home. So I've been working away at that when I get away from the economy and Zoom.
Well, that's good. Things to be thankful for sure. I'll turn it over here, Randall, momentarily. But again, Peter, Mark, thank you very much both for your time, your insights, as well as what each of you are doing to help with North Carolina's economic response to COVID-19. Randall, I'll turn it over to you for some closing comments.
Thank you, Chris, Peter, and Mark. I'll echo the remarks. Thanks from Chris. Excellent discussion, and we appreciate you sharing your expert perspectives with us today. Clearly, we'll have a lot of work to do bringing our economy back to full strength, but if we prepare and act now, North Carolina can embrace some truly exciting opportunities ahead. Thank you again to today's sponsor, Electricities, as well as to that long list of annual sponsors we showed you earlier. Their financial support is crucial to our being able to continue offering programs like the one we enjoyed today. Thanks also to the exceptional team at NCEDA who worked to bring this program to us, Liz Dobbins-Smith, Emily Martin, and Lawrence Bibbins. Please mark your calendar for Wednesday, May 27th at 11, when NCEDA is partnering with Western Governors University for a webinar entitled Entrepreneurship and Education in a New Era. Again, that's next Wednesday at 11 a.m. Watch your email for additional information on that program and a busy schedule of events and webinars coming up in June. Until then, stay connected, stay confident, and stay well. Thank you.